I tend to be sort of in the Stevie Cohen camp. It's not like the bottom is going to fall out, but there's like a lot of room for concern, I guess is the best way to put it. Nick, I don't know if you can find that clip that at FII, but he had a very precise summary of how he saw the world. And I frankly just agreed with everything that he was saying. So he probably can say it better than I.
When you take a brew of tariffs, on top of that, we have slowing immigration. And in addition, now you have Doge. I mean, that's austerity. We think growth is going to slow to 1.5% from 2.5% in the second half. And so I'm actually pretty negative for the first time in a while. And it may only last a year or so, but it's definitely, I think the best gains have been had, and wouldn't surprise me to see a significant correction.
I think a couple of very specific thoughts. The first is that you're starting to see this compression of the Mag 7 towards everybody else. So this is the forward PE of these guys. And so what you're starting to see is everybody else starting to capture back some of the ground. People are processing what the real upside of the Mag 7 is. Now, if you go to the other chart, what this starts to show you, though, is that Mag 7 is really priced to perfection. And so you have to believe that the world kind of stays the way that it is. Otherwise, you're going to have some amount of mean reversion. So I think the stock market on the margin is a little expensive and not particularly that attractive. Second, the bond market has basically said, okay, we are going to give you credit that Doge is going to work and that tariffs are going to work. So we've had some pretty meaningful compression in the 10-year, which I think is really interesting. I think it's very good for Besant and for Trump. And I think I've mentioned this before, but we got to go in and, refinance $10 trillion in the next 6 months. So you could see this thing maybe even get under 4% if we get a good string of data. The real problem, I think, though, is that if you look back and say, what does this look like? The example that I would give you guys is in 2010 in the United Kingdom, the deficit as a percentage of GDP was 10%. And the UK government embarked on a multi-year austerity plan. And they said, we're going to get the deficit as a percentage of GDP back in line. And ultimately, by 2016, it got to 3%, which is where we are trying to get to. And right now, we're a little bit under 7%. We're trying to get it to 3%. So it's interesting to ask what happened. And there, the bond market gave the UK government a ton of credit. So they kept rates relatively low and they brought them back from where they were. That seems like what's happening here.
Yeah.
The stock market kind of went sideways to a little bit down. Let's see what happens here. But the real big thing is in the UK, all of this created tremendous dissatisfaction and you had Brexit. So I think the question that I have is, if we go through a prolonged austerity program and the frustration amongst the American populace builds, what's the release valve? There, the release valve was voting to leave the EU. Here, it's not obvious to me what a release valve is.
Electing Trump was step one, and I don't know if there's something even more populist than Trump.
I think he is the mechanism of implementing the austerity. I think people want this austerity. Just the question is, what happens when the actual byproducts of that austerity are felt by people for 6 or 7 years?
Chamath Palihapitiya recently went out of his way to expose the stock market and tell everyone what Wall Street plans for companies like Nvidia moving forward. Why is he choosing to say this now? Because the once unshakable tech giants known as the Magnificent Seven are witnessing a dramatic shift in their market standing. Companies like Nvidia, Apple, Tesla, and Microsoft are no longer the sure bets they once seemed to be. Having collectively lost over $1.4 trillion in market value since December, these heavyweights appear to be losing their steam. Could this be the beginning of a new chapter for Wall Street? Welcome back, everyone, to Investocracy.
You've been talking a little bit about this. I don't know if it was a couple of weeks ago, you were tweeting about the Great Reset theory. And there's, whatever that is, the third or fourth turning people have been talking about. You want to maybe encapsulate your thoughts?
I think you have to figure out what the goal is. So one goal is, you could say that the Republicans want to have consistent political power, right? That's a reasonable goal. The Democrats want that too, right? A different goal would be to do what Friedberg said. We're going to go and take the lumps because we are going to defend the dollar and the credibility of the United States. We're just going to make sure that structurally it's sound and take the pain that's necessary to reset. That could be a goal. I think the reality is something in the middle where you can't be in one camp and you can't be in the other, because I don't think you can get anything done. And somewhere in the middle, I think the thing that I have been thinking a lot about is, when will somebody sniff out what the great coalition is that preserves political power, whether that's the Democrats or the Republicans? The reality is that you will have a consistent majority if you get three cohorts of people together. Cohort number one are the people that frankly don't have many assets and are the working and middle class, meaning they don't necessarily own homes. They don't necessarily have investments in the stock market. So they don't particularly care about what's happening there. Okay? That cohort dominates. There was a clip of a discussion at Harvard just this past week about the different political coalitions that voted for Trump versus Kamala Harris. The most important takeaway that I took from it is that if you make $100,000 or more a year, you're a reliable Democratic voter. If you went to college, you're a reliable Democratic voter. Everything else is a reliable Republican voter. But the thing to remember is that bucket of everything else is growing faster than that first bucket. So you have this coalition of the asset light, working and middle class, and then you have other people, patriotic business people and patriotic business owners and technology people that care about innovation, that MAGA has been able to corral into a coalition. My point is, if that is the consistent, reliable thing that cements political power multiple elections from now, and we've seen this before in the past where Republicans can go on a 3-term run or, a 4-term run, Democrats have as well in the past, it is bad news for the stock market and it is bad news for asset owners because it doesn't reward the constituents. Back to Friedberg's point. So if you are going to feed your constituents and your constituents don't own stocks and your constituents don't own homes, or they are so wealthy that they can be inoculated from a massive drawdown in those asset categories, what do you think the winning strategy is?
The stock market, much like a roller coaster, is full of ups and downs. Just ask the Magnificent Seven. These industry titans have recently taken a dip, shedding market value like last season's fashion. Leading the pack on this downward slope is Nvidia, as its shares tumble to new lows by the day, even after beating all Wall Street expectations for its earnings. The main culprit here seems to be the news of the Trump tariffs and how they are going to negatively affect the international chip sales, which make the majority of Nvidia's overall revenue. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
And to your point about TSMC, just one last word about their investment. The tariffs will certainly add to TSMC's construction costs, especially after TSMC had already previously, this is going back over a year, acknowledged that U.S. manufacturing in Arizona will cost more to operate than Taiwan. We know that. And back in December, Macquarie Bank estimated at least 30% more. And that's not including these looming tariffs coming. So it's certainly going to be more. And TSMC is very unlikely to absorb those costs. That means the customers have to do so.
All right. That's a good understanding of all of these issues which are at play. Christina, thank you. That's Christina Partsenevelos. Let's now bring in Capital Area Planning Group's Malcolm Etheridge and Requisite Capital's Bryn Talkington. Both are CNBC contributors. Dan Greenhouse, of course, of Solus is still with us. Bryn, I'll go to you first. I mean, are you surprised that Nvidia has continued to trade so poorly?
On the surface, yes, right? So if you look at it fundamentally, they just reported Q3 2025, right? So they have a different year. So if you just look at the estimates for 2027, the stock's trading around 22 times 2027 numbers. And that's where you have to say the market is saying we don't believe that's going to happen. And you have to respect the market. And I think to Christina's point, if we get 4 to 5 billion of tariffs on our export restrictions on these chips, well, there you go. That they're not going to make that 2027 number. And so right now the stock is still trading in this channel between 110 to 115 to 145-ish. So that channel has not been violated. We want to see that hold. But I think that you do need to respect the market of saying, well, you can say what you want about their numbers in the future. We don't believe those are going to happen. And at the same time, you're just seeing so much carnage in like an AMD, which I think is down 55% over the last year. And so this market has not suffered fools, but I don't think this is the time for you just to ignore what the market's saying. I continue to sell calls on the name. I really like the name long term, but I respect how it's trading right now. And I do want to see it bounce off this, like right around this level. You want to see it bounce and not violate that $100.
The larger picture reveals an evolving market. Jim Paulson, a market strategist, notes a pivot away from these former leaders who outshone the broader market between 2023 and 2024, surging more than 160%. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
We've gotten a correction
in the NASDAQ.
and more in the NASDAQ and, well, in the mega cap names.
Yeah.
I mean, Nvidia is off 21% from its record high of January the 7th. Alphabet's down 18% from its record high of February 4th. Microsoft down 16% from its high last July. Amazon, Meta, and Apple are all down significantly from their own record highs. You made a move too, Kev, in Nvidia today. Tell me more.
Well, yesterday at the close, Scott, we covered a quarter of the position just in case the things got a little bit more dicey today. And there was a lot of premium, as you can imagine, with the volatility. So we wrote a short-term 1-week call. It's a 123 option. We generated almost $5 of premium. So if I get taken out, I'm out at 128, and that would be great. Jim just bought it, and we still have the other 75% of the shares uncovered. But Scott, I'd be a buyer of any of these down here. Maybe not back the truck up and go all in, but if you're dollar cost averaging into positions that you really like, 10 to 20% pullbacks are the times you want to be buying.
Despite all that, Nvidia still looks like a favorable buy, especially with the dip it is taking at the moment. The future outlook for this company looks brighter than it is now, but the market dynamics regarding the Magnificent Seven should clue us in on how Wall Street is starting to broad out its options. Maybe we should do that as well. But what do you think? Share your perspective. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.